financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
All right, friends, welcome to you all around the world. Welcome to Follow the Money Radio, and welcome to episode number 420. This episode is entitled The Building Blocks of Financial Freedom Part 2. That's because we're going to be getting into the second part of our 5-part series that we've just begun with our last episode, all about our 5 levels of financial freedom. So powerful to be able to share this information with you through these podcasts. And today, as I mentioned, we're going to be focusing in on level 2 of the 5 levels of financial freedom. You can find those, by the way, on our website, followthemoney.com/5 levels. These are the steps that you can take to achieve financial freedom, right? So here on this podcast, we like to talk about solutions. There's a lot of problems, right? There's always problems we can look at. We can always see problems. We can focus on problems. We can dwell on problems. But we want to talk about solutions. We want to help you move towards the solution and not simply fixate upon the problem. The problems are immense. The problems are all around us, right? We have raging inflation around the world. We have an economy that is obviously debt-based, right? We could go through the list of the problems. We have, geopolitical tensions. We have a Federal Reserve that is in many ways out of control many times. I mean, we have political issues. I mean, the number of problems that surround us are immense, right? And if you focus on those problems, well, you're often not going to be able to then focus on the solution because you're so fixated on the problem. Well, the thing that we want to focus in on this particular episode is the importance of actually taking action in your own personal situation, in your own family situation, in your own finances, right? Taking control of what you can control. And it's amazing that when we sit down and think about if we actually do the things that are in our control, then how much better off we will actually be, right? Because I think there is something subtle within each of us that suggests, well, and it's often, we could mark it up for laziness or we could mark it up for, just simple negligence or whatever. But we just sometimes don't want to think about the tough things that we need to do in our own lives. We'd rather fixate upon other people or other issues or other problems. And it's just the way that it is. So we have to really encourage ourselves to focus in on the things that we can change and focus upon making those changes instead of simply throwing our hands in the air, pointing around at what's happening around us and saying, well, why should I even try, right? And I would imagine that there's many of you out there who may feel like throwing your hands in the air. When you think about, the economy, when you think about the state of the economy or even the future of where things are going, right? Some people can get downcast. They can get concerned. But the truth of the matter is that you can empower yourself through wise decisions, right? Through wise steps, by wise thinking about things that you can actually change. Perfect example is Washington, right? So if you sit around and watch, the political media, you may, watch what's going on and think to yourself, just pull your hair out and think, what's the point here? Well, your time, may I suggest, is much better suited and better used, better spent on focusing those things that you can actually do and change and impact in your own life, right? And so today, on today's very special episode, as I mentioned, 420, we are going to be moving into level 2 of the 5 levels of financial freedom. Remember last week, or on our last podcast, I should say, we covered level 1, which is all about building an emergency reserve. And if you missed that episode, you really need to go back and listen to part 1 first of this series. where we talked about all of the various steps that are involved with level 1, building an emergency reserve. We talked about saving money. We talked about food and water supplies, having some food and water storage, having a go bag, creating a charitable giving plan, creating a systematic savings plan. And once you have gotten through level 1, once you've checked off all those boxes, then you're ready to move into level 2. And for many people, they would think, well, level 2 must be investing. I'm ready to start investing and be starting my own business. Well, not quite yet. We're going to get there. We're going to move to that area in level 4 and level 5. And in fact, if you go through our 5 levels of financial freedom, you'll see how they're laid out. The very first level is all focused upon building an emergency reserve. Level 2, which we're going to be talking about today, is all about asset, income, and life protection. We'll talk about that on today's podcast. Then on level 3, we're going to be talking about building and diversifying your financial reserves. This is where we really build up our savings and create a diversified 6-month liquid savings. And then in level 4, we get to the fun stuff, what many people would say the fun stuff. That's where we're going to start investing, right? That's where we're going to start trading cash for cash flow and begin to create multiple streams of income. So that'll be in part 4 of this series. You won't want to miss that. And then level 5 is where we get into advanced investing, speculative investing, opening your own business, trading stocks, trading options, internet marketing, venture capital, real estate, investing in real estate and different real estate strategies. So all of that ahead. But in this particular episode, we are going to focus on level 2, which is so important, and it needs to come before we move into the investing part of the 5 levels, because this is really where we're going to build our moat, right? So we're going to be building a castle as we are creating financial freedom, and we want that castle to be preserved or protected with a moat that surrounds it. You might even envision in your mind a picture of a castle, and then you remember when you were young or whenever you've seen it in movies, there's a moat that goes around that castle and a drawbridge that will come down and allow people to come in or out. Well, many times individuals will get very fixated upon building their financial castle, right? They're buying this asset, they're buying this other asset, they're working hard to improve their income, and many other things. But what happens is that they're busy building that castle, but they have no protection for that castle, or very little, right? A lot of bald spots, we would say, in that situation. And so what we would see here is that castle then can be compromised because of that lack of protection. So just as you are getting started, just as you are building out your assets and building that financial castle for you and your family, what you also have to keep in mind is that accidents happen, bad things can happen, and you need to be able to protect not just the assets that you own, but also your ability to buy those assets, by the income that you make, your income producing ability, which, by the way, is your biggest asset, quite frankly. When you think about the assets that you have, your ability to earn an income is simply the largest asset that you'll ever have, right? Or at least for the majority of your life, it'll be the largest asset that you have until you get to retirement. So protecting that is vitally important, right, for your overall financial success. And again, many Americans, or I'd say most Americans that I have found as I've taught these 5 levels across the country through these podcasts on our website to our students and members, is many people, they don't like level 2 because it feels like the boring stuff, and they want to get to the good stuff. They want to get to the exciting stuff, starting a business and buying real estate and buying stocks and trading and all of these other things. But that would be a bad mistake if we were to jump ahead and fail to focus upon this very important level within the 5 levels of financial freedom. And that is, of course, as we mentioned, asset, income, and life protection. So let's begin by defining what an asset is. An asset is defined as property owned by an individual that has economic value, right? And there's all different kinds of assets. You can have an asset in the form of a vehicle. You can have an asset in the form of a 401k plan, or you could have an asset in the form of your home, right? There's different assets that we could have. And so what we have to think about when we're thinking about asset protection is we think about it this way. If my car, for example, which is an asset, if my car were stolen, would I want to get a check for just the amount from the insurance company that I need to get by? Or would I want to check for the full replacement value of the car, right? you can decide that up front, right? Whenever you purchase your auto insurance. What about your home? You bought your home. Now you have a home. If your home were suddenly to burn down to the ground, right? Would you want the insurance company from your homeowner's insurance policy to send you a check to rebuild half of your home? Right? Or would you want a check for the full replacement cost of your home? That's actually an option that's up to you. You can decide that whenever you're purchasing the insurance for your home, your homeowner's insurance. What about this? What if you were to become permanently disabled just suddenly? And it happens to about, many people have about a 36% chance of becoming disabled, the average person, I guess, between now and age 65. And that may not be permanently disabled. It may just be, disabled in some way, maybe even temporarily. But let's just say you were to become disabled. Would you want your income from your current job to be drastically reduced every month to a level that would just give you enough money to get by? Or would you rather continue to receive a monthly check that reflected your full income before you were disabled, right? These are actually things that you have power over, right? You actually can make these decisions. Another one, which is pretty tough, but let's just go there. What if you were to unexpectedly die? Would you want your spouse and your children to receive a check to just cover their needs and not a penny more? Or would you want them to receive a check for 100% of your human economic life value? That is, how much your earning power was, how much you were going to earn over the course of your life. That has now been robbed of your, from your family, and you have the power to be able to provide that to them, right? So which would you choose? If you had the ability to come back from the dead and be able to fix that situation, would you want your spouse and children to have more, or would you want them to have less, right? And obviously, those are personal decisions that we have to make in our own lives. And so this is where many people get it wrong on the topic of insurance, right? Instead of buying the kind of insurance coverage that they would really and truly want for their family and for themselves, they focus solely upon the cost of the premium instead of thinking about replacement value. And this is because people mostly fear being overinsured or paying too much for something that they may never use. And then they end up being underinsured in that case, and they end up leaving themselves at risk. The truth of the matter is as I've talked to people all around the country and traveled and done this podcast and through our website, Follow the Money, I have found that most people are woefully underinsured or improperly insured today, right? So, and this is where a whole lifetime of savings can get blown up. I've seen it. I've seen it happen before. I remember many years ago, I've told the story before, but I remember many years ago, a doctor, actually he was a student at a medical school, he was training to be a doctor, was T-boned in his car while he was leaving the university in the state of Oklahoma, where I lived at the time. And the individual who hit this aspiring doctor who was coming out of the university in his vehicle, this soon doc-to-be, this doctor student, was in the hospital, and he was, disabled. And the case became pretty large because the lawyers were saying, look, this student was going to go on and become a doctor, and he was going to have, X amount of $1 million worth of human economic life value. I mean, he was going to be able to create quite a bit of money and income over the course of his life. And that became the amount that the lawsuit was against the person who had hit him, right? And so that person who had just went out that day just for a quick leisurely drive, he had no idea he was going to T-bone a medical student, and he did. And the next thing he knew, he's sitting in a courtroom with a multi-million-dollar lawsuit facing him, right? Because the insurance company and his insurance company, he had relatively low insurance coverage. And so he was on the hook. This is the stuff that can happen, right? So you build this huge financial castle. You have all of these assets and you work so hard for them, but something that you didn't see pops up and can really be a problem. And again, I've seen this over and over and over again. It's so vitally important. Property and casualty insurance, right? You go down to the local State Farm or Farmers Insurance or Progressive or any of these companies that sell you property and casualty insurance. And oftentimes they will focus upon selling you the cheapest insurance. And what I tell our students and members is that there's a few things in life you don't want to buy cheap. One of them is a parachute. You don't want to buy cheap parachutes. Another thing that you don't want to buy cheap is insurance, right? Because when you need insurance, you really need it, right? You can't buy it when you need it. You can't get into a wreck in your vehicle and then go buy auto insurance, right? You can't become disabled and then go buy disability insurance. You can't die and then go buy life insurance. You can't die and then go write a will, right? These things have to be done up front, and you have to make the decision on what you would want. And too many times, people will buy insurance for their vehicle, buy insurance for their for their life, but oftentimes they are really fixated upon the premium amount as opposed to what they're actually buying. And so the point here in level 2 is to think through these thoughts about various protections that you can implement for your own financial castle, and think them through and really own those decisions. So when you're looking at your vehicle insurance, for example, one of the very first things you want to look at is the limits of liability, right? You want to look through those and make sure those are actually set to the level that you would need, right, in your own area. You also want to pay attention to the deductible. Oftentimes you can raise your deductible and then lower your monthly amount, allowing you to buy more liability coverage. But because you have a higher deductible, the monthly amount is lower. And the reason why you can certainly afford to do a higher deductible is because you're building up savings, just like we have in level 1, and you're going to do more in level 3. So you'll have a cash cushion to be able to afford a higher deductible. Many people will say, I got to have a low deductible, and that because I don't have much cash on hand, that raises their monthly fee or their monthly premium amount. So when you have cash in the bank, when you have savings, well, it allows you to say, well, I'll opt for that higher deductible because it's unlikely I'll have a wreck. But if I do, I have cash in the bank to cover that deductible. And in the meantime, I can pay a lower monthly premium. So by raising your deductible, because you have cash in the bank to cover it in the event you need it, then that allows you to be able to get more coverage, and oftentimes for even less money when it comes to the actual premium. One of the things you also want to think about with auto insurance is you always want to have uninsured motorist coverage. This allows you, for lack of a better way of putting it, it allows you to sue your own insurance company in the event that someone that you get into a wreck with doesn't have insurance, right? So uninsured motorist coverage allows you to still be able to collect on whatever the damages might be, but from your own insurance company instead of from someone who is uninsured. And there's a lot of uninsured drivers apparently on the road today, right? So you've got to be very careful. And that's a perfect example. Here you are working hard, building assets, doing what you can to be able to provide for your family. And then lo and behold, one day you're just out driving around and you get into a wreck, and the person who you get into a wreck with doesn't have any money and they don't have any insurance, right? So now that's all on you, basically, especially if it's, especially if there's a debate about who was at fault or whatever. So the point is that these are the little tiny things that we don't think about that can really become major all of a sudden if we're not prepared for them. So we know there's obviously a chance that when we take out our vehicle on the road, there could be an incursion, there could be a problem. Well, we want to think through that and say, now, if the worst case scenario happened, am I protected? Or am I going to be leaving my financial castle vulnerable because I am choosing to have very cheap auto insurance, right? So very, very key. One of the things that always blew my mind whenever I was a financial advisor many years ago, when I would meet with doctors or dentists or attorneys or anybody who had a fairly large income, I would often be surprised that they would have the really cheap auto insurance. And I thought, you're a sitting duck here. You have quite a bit of money, and without proper auto insurance, especially higher limits of liability, you could be at risk. Your assets could be at risk if something happened, right? And it was your fault. So very, very powerful to look through your auto insurance. Consider raising your deductible as high as you comfortably can, and then using the savings to raise your limits of liability as high as you can, and then finish off by adding that uninsured motorist coverage to your policy. Those are my key takeaways when it comes to auto insurance. Just don't make the mistake of thinking that your auto insurance only covers your vehicle. It can actually cover you and the assets that you will spend your entire lifetime building, right? So it's very, very powerful. Home insurance also is another one we want to look at. The largest single investment that most people ever make is into their primary residence. And so obviously a replacement factor is what makes property insurance so vital, right? So proper home insurance protects you from damage caused by theft, wicked weather, fire, other natural disasters. And if your home were to burn down to the ground tomorrow, I don't think you would want to check for half of its value. I mean, I don't think anybody would want that. You would want to check for 100% of its value, right? And you determine that. You're the one who decides that. You can you can pay more to have full replacement coverage, right? Or you can pay less and save money on your premium. So to us, when it comes to property insurance, we believe the best strategy is to purchase full replacement value. You can keep your costs down, again, with this by raising your deductible as high as you comfortably can. And then with that cushion of liquid savings that you have, that high deductible should not be a problem. Also, when you're thinking about your home insurance policy, you also want to think about, particular riders. Sometimes a home insurance policy will protect against damage and loss, but maybe not as much as you might think. So you may have to add some riders to cover jewelry from theft, or you may have to add a rider for other valuables like fine art or antiques or business equipment. Those are relatively inexpensive to add to your policy, but they have to be requested, right, usually. And so I also recommend that you take a video of the contents of your home, right, especially those items that are particularly valuable. In the event of loss, this recorded video will help you establish what contents need to be replaced when working with the insurance company. Because if you have a home that burns down and all this valuable stuff inside, we have to prove that you had it. And if the receipts were burned and there's no evidence that you have it because it was burned down to the ground, then you're going to have to try to somehow, and that's the worst possible time in your life to have to be trying to build a case that you own something after it's been, it's a terrible time. So having all of that recorded in a video, that is priceless. I mean, it's so unbelievably helpful. So that's really, really key. Again, these are things that you may or may not hear from your insurance agent when you're going to buy property and casualty insurance. Some insurance agents are wonderful and they will really go through these things with you, but many of them are of the mindset that you may just want the cheapest insurance. And so they may not push you to think about some of these other topics that you really need to think about because they may perceive you as being cost conscious. And so they're not going to bring up any of these extra things because they assume you're trying to save money or they're trying to get your business and they don't want to, they want to give you the lowest price they can possibly give you. And that's not always the best idea, right, for you. Also regarding asset insurance, let's talk about liability insurance because this is another really important topic. This is also known as umbrella insurance, an umbrella policy, because it acts like an umbrella that begins paying out once your home or your auto insurance limits of liability have been exceeded. So you can purchase $1 million, umbrella policy, usually for less than $500 per year. And that $1 million liability policy is usually enough for most people. It then really gives you protection from various things. Let's just throw out a few things that an umbrella policy might protect you from. If someone slips on your slippery sidewalk while on your property and decides to sue you, there you go. Well, your umbrella policy can kick in. Or maybe you're entertaining guests at your home and someone drowns in your swimming pool or becomes, hurt and they want to sue you. Or maybe you're at fault in a car accident that permanently disables or kills someone, like the story I had told you before. Or maybe you're sued for slander or libel, right? So just imagine working, saving, investing, building a business for your entire life just to have everything stripped away due to a lawsuit, right? And that happens every single day right here in America. A good attorney friend once told me, Jerry, waiving a good umbrella policy in front of a lawyer is like waving a juicy steak in front of a hungry dog. When you maintain an umbrella policy, you stave off the lawyers from your personal assets. In other words, a good umbrella policy not only protects you from liability, simply having it can give you more leverage if you do get sued. So as we're moving through level 2 here, what we want to do is we want to get out that auto insurance, the home insurance, the liability insurance papers, if you have liability insurance, and review those premiums, review those deductibles, make sure you're getting the best deal, and make sure each of these areas in your plan look the way you want them to look. Why? Because in the end, the most important lesson to remember about level 2 is that there are no do-overs, right? You don't get any do-overs. You don't get to do this over. If you need auto insurance, you can't add it when you need it. If you need liability insurance, you can't buy it. You cannot buy insurance when you need it. You have to buy insurance before you need it. And that's what causes many people to want to save money, but it's kind of a trick because if you really do need the insurance, you don't want the cheap stuff, right? As anyone who's been through that before can tell you. Now, in addition to asset protection for home, automobile, and even the liability insurance. We also want to think about our income protection, right? So we want to think about our income protection. When we think about that, we think about disability. We think about disability insurance. We think about health insurance, and we think about long-term care insurance. Now, when I ask people what their greatest asset is, many people will say, well, it's my home, or it's my very expensive automobile, or it's my business, and the list goes on. And while all those things are certainly very important in your overall financial plan, the truth is, as I mentioned before, your greatest asset is your ability to earn an income. So just think about it for a minute. If you are about 35 years old and you currently earn $50,000 per year, well, if you're like most people, you're hoping to retire around the age 65. So that's next 30 years, your earning potential is around $1.5 million. Right? So take a minute and do that exercise on your own. You can say, how much is my ability to earn income worth? Number of years until retirement times your annual income. And that equals your income producing potential. Now, that number for many people in America is the largest asset for the majority of their working life, right? And so the importance here is to think about your income producing ability and realize that a short-term or long-term disability could completely disrupt, that. And that could be devastating to your family. It could be devastating to your financial plan and totally destroy what you had hoped to build. Now, the thing is that many of you who are listening to me may be working for a company. You may not be self-employed. You may be working for a company. And many companies offer great short-term or long-term disability insurance plans for pennies on the dollar for what you would normally pay. And so if I was working at a company, I would certainly go to the HR department and ask, do you have short-term disability for me? Do you have long-term disability coverage? And I would try to do what I could to get that added through the HR department because you need that in the event something happens. Now, there is a great benefit to buying disability insurance on your own on an individual policy because when you quit your job or if you leave your job, you can't take that insurance with you. There's obviously that case. But no matter what, if you don't have it now, then my recommendation is to immediately get it until you can, buy an individual policy, if that makes sense. When you consider that 1 in 3 people between the ages of 35 and 65 will face a disability and be unable to work for at least 90 days, and that the average length of a disability for the average person is 4 years, it's no wonder that dealing with this topic is vital to your financial future. It can really stunt the growth of your plan. In addition to disability insurance, which again, I strongly recommend that you look into, because again, how would you pay your monthly bills if you were unable to work for an extended period of time, right? How would you be able to keep everything afloat? Well, the other thing that you got to think about, of course, is health insurance. And health insurance is another area where people build up a lot of assets and then they get sick and their health insurance doesn't cover what they need. And then all of their assets just dwindle away paying for healthcare or paying for their healthcare. And again, this is something that financial advisors see on a regular basis. I remember seeing this. It's devastating. The cost of healthcare in the United States is outrageous. It's outrageous. I mean, it's just simply incredible. So you have to be prepared for that. And health insurance is what stands between you and potential bankruptcy, right? Even if you have a lot of assets, if you have some sort of dread prognosis, the costs of treating that diagnosis could be very, very large. And your health insurance may or may not be suited to taking care of it. So unpaid medical bills are one of the leading causes of bankruptcy in the United States, if not the highest. And to make matters worse, practically every 30 seconds in the U.S., someone files for bankruptcy in the aftermath of some serious health problem. Right? So because medical and disability issues are so common in America today, they have to be confronted head on. This has to be part of your thinking when it comes to your financial plan, right? So we spend a lot of time talking about investing in stocks, investing in cryptos, investing in real estate, trading, and all of this. But all of that stuff pales if you suddenly get sick and don't have health insurance, or if you don't have good health insurance to cover, right, what you're going to need. And here, I would say that health insurance has become very expensive over the years, and it's really made it somewhat prohibitive for some people to be able to get fully covered and have that kind of protection that they need. And we could spend the whole time here on this episode talking about health insurance alone, but obviously that is something that you really want to think about and be prepared for, because that is one of the biggest potential areas where your financial assets, your financial castle that you're building for your family could be damaged greatly because of a lack of adequate health insurance, right? So obviously keeping that in mind. And also another one is long-term care insurance. Like this one's a difficult topic for many people because many Americans, as I said, work a full lifetime accumulating retirement funds, buying appreciating assets and creating income streams, only to have their financial plan decimated by an illness during retirement. Some of the saddest financial planning stories that I know of, and I have seen firsthand, involve the financial destruction of an elderly couple's finances after a life-changing medical diagnosis requires one of them to move to a nursing home. And today, the average nursing home can cost, anywhere from $50,000 to $100,000 per year. And then if you want a private room, well, then it's going to cost you even more. So I'm a strong advocate of using long-term care insurance to strategically safeguard your estate. The problem is that long-term care insurance can often be pretty expensive. I mean, it really can be. And unfortunately, you don't really see price caps on that. They just tend to go up each and every year because the cost of long-term care is so expensive here in the United States. So to summarize there, you want to examine your disability, health, and long-term care insurance, and if you have them. And if not, you want to check off the box and say, either A, I need to get this, or B, I don't want to have it. It's okay if you don't want to have these things. If you say, I don't want to have disability, I don't want to have health insurance, I don't want to have long-term care insurance, that's fine. But remember, you made that decision, right? That's the important thing we're talking about here. Empowering yourself. You make that decision. So if you have a need for long-term care and you said, I do not want the insurance, well, that's one thing. But what the sad thing is that you didn't think about it and you were like, oh, I wish I did have it. But that's the that's the tragic thing, where if you don't think it through and make the decision ahead of time and then you need it, you're like, oh, I wish somebody would have told me, right? Well, you don't want to be in that situation. You want to be in the situation where you're empowered and you say, I know that I may need disability insurance, I may need health insurance, I may need long-term care insurance, and I'm going to either say, yes, I'm going to do that, or no, I'm not going to do it, and I'm going to own that decision. I'm going to own that decision. That's going to be my decision, right? Very important that you own it. If your employer offers disability coverage or, health insurance or long-term care insurance at a reasonable cost, I would run, not walk to the HR department and request the coverage, right? I would review my premiums and deductibles and make sure that I'm getting the best deal on all of those policies. And then I would also make sure that these areas of my plan look exactly the way I want, right? Sometimes it's just literally simulating situations and scenarios and thinking, what would it look like if this happened, and am I prepared? And just running through those. And you may decide, as I mentioned, that you're prepared to deal with those situations without insurance. And if that's your case, that's fine. But knowing that you have that choice and knowing that you made that choice is what's so vital here. Okay, so now we've covered a lot. We've covered asset protection, which you want to protect your home and your vehicles, right? And then also your income protection. We're talking about disability income insurance and health insurance and long-term care insurance. This protects your overall income ability and income protection. Now, finally, in level 2, we move into the life protection. And when we think about life protection, obviously we're thinking about life insurance, we're thinking about wills, and we're thinking about trusts. Now, out of all of the types of protection that we can focus on, this one here is probably the most depressing for most people to think about, because they have to think about death, right? When you buy life insurance, you're basically admitting that you understand that you're going to die, right? Especially when you buy permanent insurance, cash value life insurance, you're saying, yes, I want a permanent policy to protect me from this 100% certainty of death. The death rate is still 100% according to the scientists. So everyone is still, coming to a place where they die. And therefore, when that happens, you can either have insurance when that happens. You can either have a policy that will pay out a tax-free cash distribution to your heirs whenever you pass, or you don't have to have that. Again, this is a choice that you have. No one says that you have to have life insurance, but you may choose to have life insurance. And there's several different kinds of insurance. We're not going to get into all those various types today and explain them all, but you know that there's term insurance. Many people have heard of this. This is where a person pays a premium in exchange for a promised death benefit in the event the policyholder dies within a specified time frame. And once that time frame runs out, the policy is expired. Now, the second way to obtain life insurance is to own it, not rent it, like you do with a term life insurance policy. When you own your life insurance, you purchase what is known as a cash value life insurance policy or a permanent life insurance policy. And these are good and for a long time. And they offer some tax shelters. They offer some cash accumulation that's tax sheltered. And the earnings and the interest are not taxable whenever you're using a cash value life insurance properly structured. And so, life insurance is a very, very key thing. Again, you cannot get it after you die, obviously. You can't go back and do this over. So you have to have that plan ahead of time. If something were to happen to you prematurely, and many of us don't want to think about it, we don't want to think that it could ever happen, but it happens every day. If something were to happen to you, would your family be okay? If you're a young father, for example, listening to me today, or a young mother, or maybe maybe a middle-aged father, or middle-aged mother, or a middle-aged spouse, if you were to just disappear off of the earth tomorrow, would your family be okay? Would they be able to carry on without you? And it's a difficult thought. It's a tragic thought, but it's an important thought because it's a real possibility. Even if it's small, it's a real possibility. And it could destroy what you've been building, right? And so by taking control of these decisions and bringing them in and realizing that they're your decisions to make, no one else's decisions to make, you have to make these decisions. That's what the purpose of this podcast episode is all about. It's tough love, isn't it? We're sitting down and talking about things that, that many people won't sit down and talk with you about. There's very few people who are going to sit down and remind you about these things. Right? That these are the things that you really have to think about. Oh, sure, somebody tells you that they want you to go invest in this stock, or that you need to go buy this crypto, or you need to go, invest in this strategy, or need to learn this, But my point is that very few are thinking about these things, the things that could happen that could implode the whole plan. And you have to make those decisions, right? You're the one who has to make the decision. So life insurance, obviously, is a very, very important topic. And you obviously can talk to a trusted financial advisor or a life insurance specialist about life insurance. It's something that you want to investigate and decide. You may have life insurance today and be very happy. You may not have life insurance today and you may be happy with that. But it's definitely up to you to make those decisions for your own future. Now, if you do have life insurance, one more point here is that you definitely want to make sure that your beneficiaries are properly designated. Sometimes, if you've had a life insurance policy for a while, you may have set up who your beneficiary was going to be. Maybe something has changed in your life. Maybe your life circumstances have changed and that beneficiary maybe needs to be updated. Don't forget about that. Be sure to reach out to the life insurance company and let them know if you have changes to your beneficiary. Keep that updated. That's another thing that can really kind of mess up after you pass away and you didn't think about or forgot to change. That can actually be a problem. Also, in addition to life insurance as a life protection means, we also have estate planning with wills and trusts, right? It seems like every month now we hear about some high profile person who's dying and they die without a will. The fact is half of Americans don't have a will. Even fewer than that have any kind of living will or healthcare proxies. And if you don't have a will, the state in which you live is going to create one for you, right? The judge is going to decide. And I don't think you want that. I certainly don't want that. So that's why it's important and incumbent upon you to create that will. Oftentimes, creating a will is practical. You can make it for free, practically. You can just write one at home. I don't recommend that. I would recommend that you meet with a trusted attorney who can help you draft a proper will. But the point is that a will is really just making your wishes known. If you were to become incapacitated and you were unable to make decisions for yourself, well, the living will would help you because it would have described who would take care of your affairs or who would make medical decisions for you, right? So a will is very, very important. And if you don't currently have a will or your will needs updating, if you have one and you need to update it, we recommend that you get that process started today. Right? Don't let the state government choose where your assets and children will go after your death. If you're a young family and something happens to you, your children, they will be appointed guardians by the state. And you would much rather decide who the guardians are. Well, you can decide that in a living will or even in your will, right? So also there's the durable power of attorney for finances, which designates who will handle your money, your real estate, your assets, your business affairs, your other financial decisions for any period of time that you're alive but unable to handle those matters yourself, maybe due to a disability or incapacitation. Also, a healthcare power of attorney, which lets you name who will make medical decisions for you if you're unable to make them for yourself, right? This is so unbelievably powerful, and it's free. I mean, you just literally have to fill out a piece of paper. A living will, which really just goes through and explains what kind of health care you do and do not want. If you want to receive, if you're terminally ill or incapacitated or in a persistent vegetative state, you can say, unplug it. You have the ability to do all of this now. You can't do it once it's too late. So these are the decisions that you have to make now. So assigning that power of attorney, right? Deciding what kind of treatment you want in the event that that you are unconscious and the hospital has to make certain decisions. You can let people know what your wishes are ahead of time, but you've got to put them in writing. You have to put it in writing. We also mentioned trusts as well. I'll just briefly mention that in conclusion, is that a trust is different from a will. A trust is a legal document that allows you to, for lack of a better phrase, to pull strings from the grave, so to speak. So these are usually put in place when you have a sizable amount of assets to protect and to direct after your passing. And trusts can be used in combination with life insurance policies to help you minimize estate taxes on your death, and many other powerful things that you can do. So trusts are different from wills, but they can really provide you with some incredible financial opportunities, or options, I should say, that you may not be able to get with some other types of protections. Now, when we think about life protection and improving our life protection that we have, we want to examine our life insurance policy. If we have one, make sure your beneficiaries are up to date. Make sure the life insurance is appropriate for your earning potential. Make sure that it's covering your human economic life value if that's what you desire. You also want to examine your wills and trusts. If you don't have one already, you want to definitely get that going. Any kind of advanced directives, if you have them, make sure they're up to date. Make sure that you have made your wishes known, not just to somebody verbally, but in writing, right? It's very, very important that you have it in writing. There have been situations where, maybe grandma told one of the sons, this is what I want to have happen. And then that's it. She didn't put it in writing. And then whenever something happens to grandma, the son is like, well, she told me. But the other son is like, well, she didn't tell me. And then you create an argument at the very worst possible time over something very important whenever grandma had made her wishes known, but she didn't write them down for everybody to see. She just told one person in private. That's not good. That could put that person who heard it in the hot seat and cause other people to disagree with it if it's a hotly contested decision. So grandma has to put it in writing, right? You got to put it in writing. So put your ideas, put your wishes in writing, and you can head off so many problems in the future and protect your family from chaos at the moment when they are going to be grieving, right? Very likely. Make sure all of these areas in your plan look the way you want, right? That's really what we're talking about here. Make sure that everything in your plan looks the way that you want it to look. Does your auto insurance properly reflect what you want it to reflect? Does your health insurance cover what you want it to cover? Do you have an umbrella policy to cover yourself from extra damages? Do you have homeowner's insurance that covers everything? Do you have video of the contents of your home to prove to the home insurance company that you actually had these items that they should be covering? Do you have a will? Have you made your healthcare decisions known in writing? Do you need a trust? Do you have life insurance? Do you rent your insurance or do you own your insurance? Is it a term insurance policy that's going to expire, or is it a permanent insurance policy that'll never expire? Not everybody needs a permanent life insurance policy, but some people do. So you have to find out, do I have what I need? And it's very important to be thinking about these things before you begin building lots of assets, because people will often do it opposite, and that's how they get into trouble. They'll build up assets and they'll be underinsured. Something will happen and then they're not protected, right? All those assets then become exposed to whatever the case might be. So very powerful, putting the cart not before the horse, putting the horse before the cart here, thinking about protection, building the moat before we continue to build the castle even bigger. right? Powerful, powerful topics here. We've seen so many people improve their financial lives by going through the 5 levels of financial freedom. You can go to followthemoney.com/5 levels, and you can learn all about what we've been talking about on today's podcast. And obviously, there's so much here to talk about. I mean, I just gave you a really cursory thumbnail sketch here of all of the topics that you would want to focus in on. So go to followthemoney.com/5 levels. You'll find level 2 on that page. Drill down and go deeper into each of those topics. We have much more for you to learn about auto insurance and home insurance and liability insurance, that umbrella insurance and disability insurance and health insurance. We have lots of stuff to say about all of those topics and wills and life insurance. So be sure to go to our website and check that out, followthemoney.com/5 levels. How much life insurance do you need? On today's Retirement Minute with Mike Mitchell, we're going to discuss that question to figure out how to determine how much life insurance you should have. All right, joining me by way of video this morning is my good friend Mike Mitchell from our Christian Advisor Referral Service. Mike, it's great to have you joining me today.
It's good to be here, Jerry. It's good to see you. Hope everybody in your family's doing well.
Likewise. I sure do appreciate you and all the hard work you do. I know many of our folks really appreciate your insights. For those of you who are unfamiliar with Mike, I'll just pat him on the back here for a minute. He's been in the financial planning industry for more than 40 years, serving people all over the country. And many of our own Follow the Money members and listeners have benefited from your insights and from your planning work. You've worked with many of our listeners and members. And today we have a listener question coming to us, Mike, from John H. in Des Moines, Iowa. And he says, after reading through your 5 levels of financial freedom, I have decided that I need to buy life insurance. I work for a small company that doesn't offer life insurance benefits, and so I guess I need to buy a policy on my own. But since I have never bought life insurance, I'm not sure how much I'm supposed to buy. Is there a standard amount that I should buy? And if not, how do I determine how much life insurance I need? Thanks, John. So John wants to know, Mike, is there a standard amount of life insurance that someone is supposed to buy when they buy life insurance? Or if they need to figure out how much they need, how does that work? How do they calculate that?
That's a really excellent question. And I would really approach that from 2 perspectives. Most people, when they're thinking about buying life insurance, what comes to their mind and what they're mainly informed about is an insurance policy that is classified as a term insurance policy. And term insurance policy just simply means you have a death benefit for a term of time. It could be a 5-year term. It could be a 10-year term, 20, 30 years in term. And those policies are, particularly in your younger years, they're pretty inexpensive and look very attractive for the amount of death benefit that policy provides. The only problem with that is that can become a trap over time because insurance companies really know how to play the mortality game quite well. So as you get older and these terms begin to run out and you need to renew those term policies, because you're older, the cost for maintaining that death benefit will literally skyrocket. And that's by design. Insurance companies, to put it one way, if they essentially can run you away at a point of time that you're likely going to be experiencing your mortality, then there's a possibility that there will be no death benefit paid out. And so you've got lots of cost in that strategy, and you've got lots of lost opportunity cost that are associated with that. So that's term insurance. But the amount of insurance, which is really more pursuant to the question, is a lot of people, first of all, they look at trying to pay off their debts. If something happens to them, they want to pay off their debts for their family and at least replace their income. And that is a starting point, and it's not necessarily a bad starting point. So if I were advising somebody, I would certainly want to look at what their debt structure looks like, what their income levels are, you may want to take into consideration education needs, some specific needs that might be part of all that. And you can arrive at an actual figure that meets all of those specific individual needs. But there is, Jerry, there is a better way to do this. And I like to introduce this concept to my clients that I'm advising in this particular way. So I like to tell them up front, I'm about to ask you a loaded question. So just get ready. And so they're prepared for that. And particularly if there is a husband and a wife sitting next to each other, I want to ask this question to the husband. If you knew today that you were going to die tomorrow, and today you could have as much life insurance for your family as you wanted, and it didn't cost you anything to obtain that life insurance, how much would you want? It's a very interesting question, and I get lots of answers. $1 million, $5 million, sometimes it's actually a number. But the real answer to that question is as much as I can get. That's the correct answer. And what that really demonstrates is a concept called economic human life value. Every major insurance company in the world will issue a maximum amount of life insurance on your life based on your financial data, your financial issues. And if you can obtain that amount of life insurance, that is your maximum human life value. That's all you can get at that particular time, at that point in your life. Now, here's what's interesting. If you can, through proper planning and proper strategies, which we like to work with on our clients, and we can find ways to obtain that maximum economic human life value for a client, and we can put that into their planning model. What is interesting is by obtaining that life insurance, it will make every other asset they will own in their lifetime 30 to 50% more valuable. Now, that's a pretty strong statement, but we like to back that up with being able to educate our clients about how to go about doing that. So the real answer to John's question is this. You should be able to obtain the maximum amount of life insurance that an insurance company would be willing to issue on your life. And if you can obtain that in a permanent life insurance policy, a policy that builds cash values and gives you opportunities to take advantage of tax laws, then you're going to build lots of wealth, and you're going to be able to use that wealth during your lifetime. It's going to create living benefits. It is going to take care of your family if something happens to you, but you can strategize these plans in such a way that you can create wealth as you go. And if you properly plan, oftentimes we can help clients find ways to obtain that kind of an insurance plan without having to come out of pocket with a lot of extra money. So it's part of the planning process.
That's very big. In fact, when you mention human economic life value, it reminds me of the old concept. I believe it was Solomon Huebner that put out a book a long time ago that was all about human economic life value. That's a really interesting calculation. And you make a great point that when people go in to buy life insurance, Mike, they often assume that they can just get whatever they want. They can buy $40 million of life insurance. They assume that they could just buy whatever they want, but that's not the case, is it?
No, it is not. Insurance companies will set a limit on how much they're willing to go at risk upon a particular person's life based on their financials at that time. And obviously that's a moving target. It changes because your financials will change over time, which means you should have somebody that's able to review that with you on an ongoing basis to make sure you're maximizing the protections for your family and you're getting all that you're entitled to.
Mm-hmm. And then the other question that you pointed out, which is so important, is it's not really a matter of how much should I buy, but it's more of how much can I get? Because again, the reality is that some clients can't get life insurance at all. Some people want life insurance, but when you want it or when you need it, perhaps it's too late. So you have to buy it when you don't need it.
That is correct. That is very, very accurate statement. And you're right. Money is not the only thing that obtains life insurance. You have to be healthy enough to qualify for it. So an insurance company is going to want to look at your health background, your health issues to make sure you are an acceptable risk.
Mike, that's great input. John, if you're listening, and I assume you are, then there's your answer. You want to talk to a trusted financial advisor. And of course, the question I think Mike has posed is very important. You want to sit down and think to yourself, how much would I want my heirs to have? How much do I want my spouse to have? If I could buy any amount, how much would I want? Those are the kind of questions you can ask in the presence of a trusted financial professional, of which Mike Mitchell is one. If you'd like to contact Mike, why don't you give out your phone number, because people can contact you directly and ask these questions about life insurance, and you can help them get set up with a life insurance policy.
Absolutely. If anybody would like to reach out to us here at Strategic Wealth Partners, our toll-free number is 833-370-0777. Let me give that to you one more time. 833-370-0777. And we would be happy to speak with you and to help you come up with the right numbers that fit your particular situation.
Mike Mitchell and myself, we've been partnered up now for many years through our Christian Advisor referral, and I sure do appreciate all the wisdom and insight you bring to the show regularly here, Mike, and I sure do appreciate your time today. Thanks a lot.
I appreciate it. It's great to be with you and great to reach out to the people that are subscribing to Follow the Money.
All right. God bless, my friend.
Thank you, sir.
All right, friends. Well, we are now in the closing moments of today's podcast episode. It's been wonderful to share this time with you. You just heard from our good friend Mike Mitchell, who is a part of our Christian Advisor referral. He's been helping people just like you with the whole entire financial planning process, everything from life insurance and long-term care insurance, disability insurance. We talked about all those things today, but he also helps with other things in your plan, such as retirement planning, and even referring you out to attorneys who can help you with a will or a trust. So lots of powerful information on today's podcast episode. And I want to leave you with a couple of calls to action. Number one, I think the most important thing that I would stress here is to go back and look through our 5 levels of financial freedom. Think about what we've talked about today and see what areas of your financial plan could use some improvement based upon this episode. Another call to action would be to consider reaching out to a trusted financial advisor. You may have someone you already have in your life, a money guy who you can turn to and ask questions about some of the things we've talked about. But if you want to be put in touch with our own network here, you can contact us through our website, followthemoney.com/advice. There you can request to be put in touch with a financial advisor in our network, or you can just simply reach out to Mike Mitchell directly. You can call him, say, I heard you on the podcast episode. I want to ask some questions about life insurance that you talked about, or other types of insurance, or retirement planning in general. So we are here to help you. We are here to serve you. And I sure hope today's podcast episode has given you more confidence about building your financial future. And as always, I like to leave you with a final word. This time, just a thought, just a quote by someone who is anonymous. And it goes like this: buying life insurance is like fixing a leak in your roof. The longer you wait, the more expensive it gets. It's very, very true. Life insurance and all kinds of insurance that are based upon your age are going to go up and up and up each year. So locking those in while you can is always a good idea. And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Till then, God bless.
The information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do consult a trusted financial professional before making any financial decisions.